Welcome back to our weekly update. I'm Charlotte McLeod with the Investing News Network, and I'm here to give you a quick look at our top stories for the week. Gold has regained some ground after dropping in the aftermath of last week's Federal Open Market Committee meeting. It opened the period in the $17.85 to $17.90 per ounce range, but was just above $1,800 at the time this video was recorded. I had the chance to review the latest Fed takeaways with Gareth Soloway of InTheMoneyStocks.com. Gareth is always a favorite on our channel, and he said what many people seem to be thinking. The central bank is starting to panic. Now that we've reached the point where the Fed is admitting its concern about inflation, why isn't gold doing better? I asked Gareth that question, and he said the yellow metal is behaving like it did in the 1970s. Here's how he explained it.
So in the early 70s, when there wasn't a ton of inflation yet, you had a big move up. I look at this as what happened between 2018 and 2020. Then when inflation started to bubble up in 75, 76, gold actually went down and consolidated here for about 2 years. It wasn't until kind of 77, 78 where gold had this epic move to the upside, where it went from $100 to about $800 to $900 an ounce.
If gold is replicating its price pattern from the 1970s, which Gareth thinks would make sense given similarities in inflation data, the precious metal should experience a big move to the upside midway through the year. Percentage-wise, Gareth doesn't expect gold's upcoming increase to be as large as it was in the 1970s, but he does see 3,000 to 5,000 as a possibility in the next 5 years. As market watchers eye the Fed's path forward, rate hikes are a key question mark, namely how many there will be this year. With that in mind, we asked our Twitter followers their thoughts this week. The poll was ongoing at the time of this recording, but most respondents voted for 1 or 2 hikes in 2022. We'll be asking another question on Twitter next week, so make sure to follow us and share your thoughts. Battery metals are in focus right now as lithium prices ride high, but what about the electric vehicles they're used to power? INN's Priscilla Barrera looked this week at the future for EVs as the green energy transition gains traction. Experts agree that 2021 was a strong year for EVs, with car makers offering a wider variety of models, including lower cost options and different vehicle types. These changes were reflected in sales, which doubled during the period. Expectations are strong for 2022 as well, although challenges remain, including EV subsidy cuts in China. And while elevated prices for lithium and other battery metals are exciting for commodities investors, they could become a problem for EV manufacturers. That will be an issue they'll need to grapple with in the months and years to come. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our free report or any article mentioned in this video. We'll see you next time.